From Boy Scouts who I be, straight to your dome. We coming straight to your dome, bringing all you ruckus to all you rap motherfuckers. Boy Scouts who I be, flip mode is the squid dog. Bust your rhymes, break it down like this.
Yo, which motherfucker stole my flow? Eeny, meeny, miny, mo. Throw them type of niggas right out my window. Blast your ass, hit you with a direct blow. Blow, coming through like G.I. Joe. Star Wars moving ill like Han Solo. Make you bounce around like this was Calypso. Always shine cause I got the high pro glow. You think that you can hide, you think you can lay low. Roll up on your ass like Hawaii 5-0. Mac out with my dreads in my Kango. Forget the moment nigga just passed the Cisco. Yo, take a trip down to Mexico. Come back with that shit that might make you psycho. Maximum frequency studio stereo. Sorry this is it but homeboy I got to go. I step up in the place and yo I step correct. Got you all in check. I got that head nod shit that make you break your neck. I got you all in check. Hey, you know we come through to like the discotheque. I got you all in check. Throw your hands up in the air and never disrespect. I got you all in check.
Word up. Let me just fuck up your mind, please.
Hey, yo.
Let me fuck up your mind. On
time, showing you the rhythm as I get ragged, get raw. Yeah, I need the man coming on very raw. It's supposed to ride, giving you much more. So, yo, one more time I come. Knucklehead flow that make you act real dumb. Yo, I burn your food like Florence. Run up in your grip like my name was Search Warrants. Shut your mouth, nigga, don't you complain. Fix you up, makes you whip cut like cocaine. Ooh, insane to your brain. Right on your subconscious, I'll leave my shit stain. I'll be the mostest with rhyme overdoses. I'm stepping over shit like I need osmosis. Sick lyrics like multiple sclerosis. Focus while I display flows ferocious. Weak niggas just fall and keep tumbling. Distribute lyrics like I'm hand to hand. Hustling. Hardcore like Rick Draw, McGraw. But what you heard, you ain't heard this before. I make sure everything remains raw. 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 Yo, when I step in the place, I leave damages. No bandages on pussy from miscarriages. Yo, watch me bring the newest recipe. Fuck you up quick and condemn you all with leprosy. Let me hit you with flows that come various. Send you home and make you lie about your area. Niggas can't see my routine. When I round up, I flip more niggas and get cream. And you know what the fuck I mean. Now I'm on the scene, stepping through like me, Joe Green. How I'm making you feel the extreme. Till I rock you out, then turn on my real high beam. Oh shit, now I got your brain fried. Once you inhale the smoke from my flow, carbon monoxide. Use your imagination, let me take you higher. Rain, hell, no earthquakes, earth, wind, and fire. Yo, hit the dirt, get on the floor. I'm that outlaw, nigga living right next door. You should just roll out the red carpet or move it target. I got you open like supermarkets. There's only 5 years left. Why niggas just give to death? You breathe their last breath. Days of my life goes on. Word is on, I make you feel my proton, neutron, and electron. Yo, I be the number one icon. Word to the holy Quran. I rock on and on and on. Hey, on and on and on. Motherfuckers be acting like you don't know the half. You and your whole staff make me laugh. Yo, you need to sing my song with your similar features like Olivia Newton-John. Damn, I make the whole place warm. Then hit you with some shit that make you niggas look deformed. Now, stay tuned to every Busta Rhymes coming soon. I will King Kong on niggas like Gorilla Monsoon. Soon. Whoa, what seems to be the whole analysis? Busta Rhymes just be ripping shit type miraculous. Bang you on your head so hard, shit be forming calluses. Let me get this loot so we can move up in these palaces. Watch me get down and just do my thing, baby. Watch me get down and just do my thing, baby. Let me do my thing. Flip mode is the squad, let us do our thing. Let us do our thing. Yes, yes, do my thing, baby. Let me do my thing. Let me do my thing, baby. When I step in the place, you should keep your mouth closed. Take your fat finger out your nose. You should just pay attention and watch how I wild on records. Make you say the Lord is my shepherd. In the process, I do away with all nonsense. Hit you with magic like my name was Pocahontas. The dread gon' make you party till you dead. Niggas quick to talk shit. Oops, upside your head. Put your head to bed. Let me do my thing. Enough said. Shit so hot, make your chicken head do the spread. Tell me what you said. I said I never leave you misled. Why you bullshit? I'd rather get the Lucci instead. Ha, ha, ha. Flip until you fall while then in your whip. Till you crash into a brick wall. You the nicest. I be that nigga that be priceless. Always blowing up your spot, bringing more surprises. You know you really need to come clean. Let me do my thing. Don't you even try to intervene. I will endanger your species like an ostrich. Hold you hostage.
Okay, now you guys can probably hear me. Let me know if you can hear me. You should be able to hear me now. Yeah, alright. I'm sorry guys, I don't know what it was. Usually it works. I haven't changed anything, so yeah, weird. Anyway, I'm glad it works. So again, I have to do the disclaimer once more. So first of all guys, this is not financial advice. This is for your education purpose only, so you can build a framework around your trading. Be small, be humble, focus on the long term, and do not risk money you cannot afford to lose. This is purely educational. Again, this is not advice. It's just to give you guys a guide and just my insights into the market. So again, not financial advice, just sharing my view. So let's start with the screen share again, and here we are. So I'm just gonna run through this document with you guys, just the things that I highlighted here. We're gonna go through the economic calendar just briefly. I think we all know what's been going on today, the FOMC meeting minutes. So I tell you guys all the time, this is just between brackets, right? Quote unquote, just the meeting minutes. So the FOMC meeting is the big meeting where they discuss what interest rate decision they're gonna take, what their policy is gonna be, and things like that. So that's where all the decisions is being made. Of course, the meeting minutes is just an overview about what is said and what is done during that meeting, right? Of course, it gives us as investors, as traders, a lot of insight about all the little details that have been discussed during that meeting. But it's nothing new, right? Of course, it's a little bit more new. We have more information now, and basically, right now the market was waiting. Is this document gonna push back to the narrative that they decided during the meeting? So last time when the FOMC, when the Federal Reserve came together, had their meeting, they decided to hike interest rates, but not as aggressive anymore, and to see how future data is being released and what it's telling them to make their next decision. So basically they said, we're not gonna give a future outlook too far into the future. We're gonna see and base our decision on the data that's coming out right now. And the market took that as a softer tone from the Federal Reserve, as more of, oh, we're not gonna go as aggressive anymore. And that's why we saw the dollar basically falling a little bit. US 10-year yields were falling, and that's why the that's why the dollar was falling. Okay, we saw that that decision was being appreciated by the US stock market. It was appreciated by cryptocurrencies as well. So all risky assets went to the upside, and safe havens, especially the USD or the US dollar, took a little bit of a hit. Now, today, during that release of these minutes, that detailed report about what is said and done during that meeting, basically pushed back against that narrative, and we saw that the market again started to buy the dollar. The dollar got strong, right? And we saw that if we take a look at the stock market, for example, let's take a look at the US 30, which is right over here. We can see that it's starting to fall a little bit. We can see that it's not being appreciated. Of course, higher interest rates, a tightening financial market is not being appreciated by risky assets. Also, but probably, I haven't looked yet, but if we see here, Bitcoin is already down 2% just because of that decision, which is no surprise, right? I was telling you guys, we are probably going to continue to create another leg to the downside. That narrative, that view, that analysis was tested because the Federal Reserve, they didn't stop with their hiking cycle or their tightening cycle, but they were pausing, they were hesitating a little bit, and that was a risk to my view that Bitcoin, and in that sense all cryptocurrencies, could see another leg to the downside. Now these meeting minutes confirm my analysis again, and we could expect a continuation to the downside. Of course, the technical analysis patterns, they show us nothing else than more downside, right? We have impulses to the downside, corrections, impulses, corrections, impulses, correction, and now we expect another impulse. Are we going to go much lower on cryptocurrencies? To be honest, I don't think so. Maybe if I go one time frame bigger, we could see like 10k, 11k, something like that, but I don't think we'll see much lower prices. So yeah, I'm just gonna wait a little bit before I get and start investing my money back into more risky assets until the tightening cycles in the world are over. If we see inflation continuing going down, that's when I will start buying stocks, buying cryptocurrencies, buying all these other things. So until then, if I see, and I'm watching the cryptocurrency market as well, guys. So when I see cryptocurrencies going up, of course I want to enter that market, right? I don't want to miss out on anything, but I need to stick to my fundamental analysis. I need to stick to my fundamental rules, and it wouldn't make any sense if cryptocurrencies, or in that sense, all risky assets would go higher during a tightening cycle. It just doesn't make any sense. It never happened before, so now why should it now, right? Yeah, that's that. Let me go back to that original document that I have over here. So let me just go over through the highlighted stuff. The US dollar stays supported into the FOMC minutes. Of course, this document, guys, is from 9 o'clock, so London open. So by then the minutes weren't being released yet, but now they are released, and we know, of course, the answers. But still, I'm gonna read through it just for your education purpose. This particular meeting had triggered a sell-off into the dollar, and they are talking about the previous meeting, on the view that the Fed might have already taken the policy rate to some kind of a neutral level, and the future rates or the future rate hike would be undertaken on a meeting by meeting basis, also based on fundamental data. The question is whether the Fed wants to use these minutes as a communication tool to push back against the view of a 2023 easing cycle, right? So once everything starts to ease during 2023, perhaps, that's when I will be buying risky assets, stock market, cryptocurrencies, etc. All right. So we came to the conclusion that they did push back against a narrative of a 2023 easing cycle. So that means that they are still planning to hike to tighten during 2023. And that's not good for growth. A further rejection of this market pricing should help the dollar, that happened, and bearish flattening of the US Treasury curve could pressure the commodity currencies, and that happened as well. Okay, we're gonna look at the commodity currencies in a second, but we can see that, for example, AUD USD could come under pressure. That's happening very much right now, hit by Fed applying the brakes to growth at the same time as Chinese growth prospects are being revised even lower. So again, Chinese growth is being revised lower. That's not good for commodity currencies or for commodities in general. And the Fed applying the brakes on growth by hiking further is not good for commodities or commodity currencies. I hope that makes sense. Then for the euro, so the gas crisis and what it means for the eurozone growth prospect this winter is clearly taking its toll on the euro, as Karsten Brzezinski wrote yesterday in reaction to a near record low German zoo sentiment. So the German zoo sentiment is a very important data point that's being released for the eurozone. It's about Germany, but we all know Germany is one of the most important countries for the eurozone data. A German recession, and in that sense a European recession, is almost inevitable in the second half of the year. Perhaps the ECB, rather like the People Bank of China earlier this year, will embrace a weaker currency, because a weaker currency is better for the economy, right? After a month of consolidation, Euro USD doesn't look particularly oversold on a technical indicator or on technical indicators, and we continue to favor support at 101, given away to move to parity. So parity is the 100 level. So that's not good. We had an analysis on Euro USD basically telling us the same thing. Now that's being confirmed by fundamental analysis. So that's really nice. If you have a sell on the longer term for Euro USD, this confirms it, and basically that it just tells you don't get out of that sell. Then for GBP, so sterling, which is the pound, enjoys the Bank of England repricing in addition to the euro weakness. And I do question a little bit about the euro weakness today, because when you're looking to the euro, when we're looking to the euro charts, the euro is seeing a lot of strength. So we need to figure out why that is, but probably it's not gonna last very long. So in addition to the euro weakness on the back of higher gas prices, the move in gas also helped to reprice the Bank of England cycle again, so the tightening cycle. Looking at OIS, that's overnight interest spread, I think. I don't know what the I is for anymore, but I do know what it means. Pricing for the Bank of England policy rate in March 2023. Market pricing has shifted, and this is very important, from 2.72% in late July to close to 3.4% yesterday. So basically that's a lot of hiking, a lot of tightening that is changed very, very quickly, and things like this strengthen the currency a lot. Okay, we all know currencies are driven by interest rates. Well, this is the interest rate, guys. The market is pricing in 3.4% yesterday instead of 2.2% last month. So that's big, okay? On the top of that, UK inflation quickened to 10.1% year on year in July, faster than expected on a new 40-year high. So that came out today as well. So let's see. Wage prices so that's what has happened today on the economic calendar. We can see AUD wage prices. Why don't I have any numbers on that? That's weird. All right, I do want to see today. Let's take a look. AUD prices. Let's start with NZT. Producer price index rose. So producer price index, guys, again, PPI is how much are producers paying for their goods or for their commodities basically to produce goods. If this is rising, then inflation will rise again as well. So this is good for NZD hiking or tightening. More tightening will be necessary because we can see PPI is still growing. So that's probably gonna hold NZD a little bit more to the upside against a currency like AUD, which is seeing more negative numbers. Wage prices are going down. That's good. Basically, that means that their tightening cycle is working. If wages are going down, their monetary policy statement came out as well for the NZD. Oh, was that today? Wow, I didn't even had a clue. Wow, that's a big mistake from my side. Sorry, guys. I should have let you guys know. So we're gonna have to take a look into that as well. I'm gonna post the interest rate decision in the Discord. Sorry about that, guys. Wow, I haven't been trading today. Only the trades that I had open. I was working on the bot, as you guys know. And then for GBP, CPI came out at 10.1 year over year. That's big, guys. So it's still increasing. They expected it to increase, but it increased even more. So we came from 9.4. They expected 9.8. It's now 10.1. That's double digit. That's crazy. So that means that basically the Bank of England will have to hike even more, faster, more aggressive. And that's gonna push up the pound for sure. PPI all higher. Then here we had PPI core output. That's not that important. So we had good numbers for the pound. And then here we had retail sales, basically 0. So that's not really good. Retail sales control group, exclusive autos, Fed Bowman speech. Yeah, that was. Oh, we still have the FOMC meeting minutes. They need to come out, so that will give volatility to the market. Fed Bowman speech again. So he's speaking 2 times today. We can see the dollar is already going up, probably because of this, probably because of his speech and because of retail sales. They are good here, but not here. Difficult to read this, guys. Business inventories basically stay the same. So yeah, it's gonna be all about the FOMC meeting minutes at 8 o'clock Belgian time. So be prepared for that, guys. I'm trading right now with the EA. I'm gonna turn it off around 7 o'clock when the stream ends. So make sure to do that as well, because that can give you a lot of volatility. So we'll see if the meeting minutes push back against their narrative, against their initial decision during the last meeting. Then probably the dollar will get supported and move higher. Stocks will go down. Currencies like AUD, NZD, and CAD will go down as well. Commodities will go down. The stock market will go up. But if basically this just confirms their narrative and confirms their decision, then we'll see a different reaction. We'll see the dollar melt even more. We'll see stocks going higher, cryptocurrencies going higher. But again, I think they're going to use this as a tool to push back on all the negativity, all the negative price action for the dollar. So let's hop on to the charts. Where are we? Here we are. So that was Bitcoin, just my view. We can see, looking at the dollar, so basically going to a daily chart, we can still see we are very, very clearly in an uptrend, creating higher highs, higher lows, higher highs, higher lows, higher highs, and this is a new higher low. Basically, we are right at that role reversal level right over here. We are in our buy zone. That's great as well. That 50 EMA is acting very, very nicely as support. So we can expect this purely based on technical analysis that the dollar is still gonna go higher and create new highs. Maybe 110 would be very nice to see. 111 would be nice as well. I'm still a dollar bull. Basically, the world is still in a bad situation, and when the world is in a bad situation, the dollar usually gets stronger. we had bullish divergence here as well. So we have basically a low, then we had another low, but here on the RSI we are not seeing the same thing. Here it's going a little bit to the upside. I wouldn't exaggerate it, but it is going higher. At least it's not creating new lower lows like it's doing here. So those are all signs that the dollar doesn't really want to go much lower. 105 is a strong support, and that's probably not going to break very soon. So taking that in, we can know and take a look at AUD USD, for example, which is going lower. This is daily chart. We had bearish divergence again on the daily chart. Here it's moving lower, here it's moving higher. So that's a reason to be cautious. The pivots are stepping down as well. Yes, we went all the way to the R1 level, which is the highest it can go. If it goes higher than an R1, we're probably going to continue higher. We turned around right at that R1 level, which is great. It's showing us that the dollar is too strong, definitely too strong for that AUD pair or AUD currency. Somebody asked me today right over here, are we going to go lower or higher on AUD USD? I told him we're probably going to go lower, but it depends on the meeting minutes. Well, it looks like the market isn't waiting for those meeting minutes, and they have already made their decision. Now, of course, it can turn around much faster if we have these minutes showing us that the dollar is going to get weaker, that the Fed is still going to continue with scaling back on their hiking cycle or their tightening cycle, then this can be a V-shape recovery and go all the way to higher highs. Okay, I'm just gonna tell it like that. I'm not gonna put an exact price on it, but it can reverse very quickly. Is that gonna happen? I don't think so. I think we might see a retracement and go lower because I expect the dollar to get stronger, right? So let's go over some trades that we marked up last time during our live stream. I know this one, I remember this one. We have a very strong support right over here on the daily chart. We can watch that again. That support has held. We had an engulfing candle right on that daily support, so that's nice to see as well. But we were waiting for that break of structure. So I think it was on the 1 hour time frame that we were somewhere over here. I told you guys we need to wait for this level of structure, this red zone to break. This break of structure need to happen before we can expect a retracement to this level or this level and then start buying again. Now we didn't manage to get higher, so we are still in this trading range, which is a very dangerous place to do anything, to be honest. We still have the chance to go higher, but now with the dollar potentially getting stronger again, we could see a little bit more downside or a little bit more weakness for the CAD. So I'm not really convinced that we will continue to go higher. So we'll need to see again. There's a lot of bearish divergence here as well on these on that double top right over here. This one is higher than this one here, totally not. Okay, so we can still go lower. So for now, I would stay away from this pair. It's getting too hot under our feet. It's getting too dangerous to do something with this one. So I'm gonna demark it. We had CAD JPY, which is too choppy right now, but it's at a level where you can potentially short it. But again, it's too dangerous. It's too choppy. Looking at a 4 hour time frame, looking at a daily time frame, we have created a double top, a sharp push to the downside. This is corrective, so we can still go lower, but I wouldn't wait for it. Euro AUD, so again, that's one that I have less of a fundamental explanation for. We expected this when we were here to recover and retrace to that zone, then to go lower. The market was too aggressive. We didn't got all the way up to that zone. We did short to my target, but we didn't get an entry. And now we see that Euro AUD is sharply going to the upside, probably because of AUD weakness. So I'm going to stay away from this one. Doesn't really make sense to me. The only thing that would make sense is that it wants to go and retest this pivot. We have a zone here as well. We have a zone here. So we could go all the way to here and then maybe continue to fall. We have bullish divergence here as well, as you can see. So that's no surprise that we are going higher. So no confidence in this trade to either short or sell. So I'm gonna stay away from it, gonna demark it. Euro CAD, that was a trade that we marked up last time. Again, we had support here. It broke that support with a nice impulsive move. We have a nice retracement, a nice pause in the market. Usually this predicts a continuation to the downside. Euro weakness and Canadian dollar strength is fundamentally possible. We had oil inventories coming out a little bit weaker than expected. So that means that if there is less oil inventory, then oil is basically low in supply or lower in supply, and then the price of oil increases, which drives up the price of the Canadian dollar as well. So in that sense, in that narrative, Euro CAD could very much go lower. Still looking into that one. If you go to a 4-hour time frame, we are still in the middle of the range. So this is basically our range, something like that. I would try to short it if we were here, or I would wait for a clean break and then a retracement to sell it right over here. So for now, when you are in the middle of a range, in the middle of nowhere, be very careful with doing anything. Euro GBP again. Oh, that was a very nice trade. That's a textbook trade, guys. Let's see. We had a little bit of a head and shoulders over here. Then we had a break of that neckline. We had that bearish cross, that 21 EMA crossing that 50 EMA, very clean, very nicely, going to the target. That's what we want to see. And then the next thing that we want to see, guys, is a retracement to that pivot, a resistance of it, or a dynamic resistance of that 50 EMA, very nicely retraced to the pivot, entered our sell limit. We didn't go into drawdown, almost nothing, like 1 or 3 pips, something like that, and we went straight to our target, which was right over here. We hit our target by 1 pip, 2 pips, something like that, and we went all the way back up. So basically, very nice, a very easy textbook trade. When it moves from the pivot itself, we expect an aggressive target. That happened. When we would have moved a little bit deeper and we moved from the M3 level, which is the top of our sell zone, we would expect a more conservative target, but we moved from the pivot, so this was to be expected. Very nice trade, a 1 to 4.6 risk reward, so that's nice and awesome. Right now, again, be very careful. The pound is gonna get stronger, euro is gonna get weaker. Yeah, be very careful. Maybe on a smaller time frame. Yeah, I would definitely wait until you see some kind of a double top, a break of that. So something like this. Let me just draw it. When you see something like this, and then we might have some bearish divergence on these two tops right over here, and then we had support right over here, breaking that support strongly, going back to that zone, and then here would be our sell zone all the way down. So that's what you're looking for if you want to short Euro GBP. More ideally would be a sell zone right here, a 50 EMA running here as well. You know the drill. But for now, I would be very patient with that trade. Euro JPY, so let's see. We were expecting to go lower. That was on a 1 hour time frame, I think. So let's see how that trade worked out. Whoops, I still have my drawing tool on. Okay, so very similar, right? We had a double top. Do we had bearish divergence? Not really, but we were above that 75 level, so we were oversold. We had a very sharp impulsive move to the downside, breaking support here, breaking support here, and that's basically our cue that we need to look for retracement into our sell zone. We had a bearish cross here, so the first pullback into the sell zone, pulling back from that target zone, which is important as well, pulling back to that sell zone and trying to enter in that sell zone. It took a little bit longer. The first entry was right over here. If our entry was higher, the M3, for example, we would have triggered the day after, but our target zone was right over here, and we would have we got filled with our target. So that's nice as well. In the worst case scenario, our that's going to be worst case. This was our risk reward. That's still a 1 to 5 risk reward. Wow, that's crazy. All right, so that was worst case scenario. Best case, I think, best case was stop loss. So that wasn't the best case. So yeah, you need to figure out when you want to enter. Do you want to work with limits or not? Personally, I don't use limits very often because I want to see what price action is doing. If I use limits, I gotta be honest, usually I use the more conservative entries, just the safer entries, which are right around M3, because the pivot itself is quite aggressive. Of course, it's possible, but you need to know what you're doing. You need to know how aggressive the market is, and this market wasn't super aggressive. As you can see, it took a long time before it made that drop. Once the drop came, it came fast, but this was a better place to enter. Bearish divergence, as we can see. Again, this was broken. Once that was broken, a retracement to this level could have been an entry as well. Or once you saw strong engulfing candle after bearish divergence, also a very good place to start selling. So for now, we are back at that high resistance right over here. Be very careful. We are crossing to the upside. We are starting to turn bullish. So we need to be very careful, especially if tonight FOMC comes out strong for the dollar, which means strong for the US 10-year yield. This one, if this one goes higher as it is moving right now, if this one continues to go higher, not what I was expecting at least, but if this one continues to go higher, the yen will get weaker as well. So Euro JPY won't be the best selling opportunity, if that makes sense. So I'm gonna demarket because it's not my one of my favorite trades. I'm going to Euro Noki, not the best one. Euro NZD, I don't know. It's probably because the NZD interest rate decision. We need to take a look at that after the call and analyze that. On the bigger time frame, we haven't seen anything that is basically worrying, because this is market structure, right? This is a big consolidation which is acting as resistance. This was our first point of contact where we would try to sell. Again, it's not lining up, nothing is lining up, but it's only when we break this resistance that we need to worry and the market could go higher. Is that gonna happen? Probably not, but we need to be careful. Am I gonna sell here? I'm not gonna do that. If I would want to sell this, I would again need to see something on the smaller time frame. We already have bearish divergence, so that's something. We need to see support break, retracement. The 50 EMA also acting as dynamic resistance. We need to see the pivots stepping down. Right now they are all stepping up. So once you see one stepping down, then retracing into that sell zone, that 50 EMA acting as dynamic resistance, the 21 EMA crossing that 50 EMA to the downside. Those are all signs that what we are looking for as sellers. So for now, there is no sign that this is going to go much lower. We need to be very careful. So I'm going to demark that one as well. Euro Noki, we are seeing bearish divergence here, although this high isn't much higher. They are probably equal highs. Here they aren't, so that's a good sign. If Euro NZD, Euro Noki could go lower, it is in a good place on the bigger time frame. It's what we marked up last time during our call as well. We have support here. Our sell zone is here. We were in the target zone. Our target zone retracement into our sell zone. That's what we want to see. So this one could go lower. We need to be very careful, of course. Again, Noki, the Norwegian crown, the Norwegian economy is also driven by oil. They are also oil exporters. So if oil is appreciating, then the Norwegian crown will appreciate as well. Again, oil inventories are lower than expected, so this is possible. So that one is still valid. Euro USD, of course, one of the nicest or the best trades that we analyzed so far. So again, this was our sweet spot confirmation cluster zone. We had the downtrend channel, third touch, which is great. Sell zone from our pivot. Pivots are stepping down. 50 EMA acting as resistance. The 21 EMA below the 50 EMA. Impulse, correction. Next impulse is to be expected. First target is just the one level, which is right over here. That's parity. If we break below parity, we could go much lower. But of course, for that, we need the FOMC meeting minutes to be supportive for the dollar. So just be careful. Again, if you look at this as well, against the dollar, the euro isn't getting any stronger today. If you compare that to euro AUD, for example, it is going higher. So this is not euro strength. This is just AUD weakness. Okay, and AUD weakness comes from the market thinking that the dollar is going to get stronger, already anticipating on the meeting minutes. I hope I'm not going too fast. I just have some things to do, guys. I need to be somewhere as well. I'm going to meet up with some moderators for the Discord. So yeah. Also, if you haven't joined the Discord, just click the link below and you'll get in right away. Looking at GBP AUD, so that trade didn't work out either. We didn't got in. We were expecting from that target zone a retracement into that sell zone. We didn't got in, but it did reach that target zone, unfortunately. But we'd rather miss a trade than get in at the wrong level and get stopped out. For now, if we break back below that zone, that could be a good sign to go lower again. Of course, let it just complete that impulse to the downside. But that wouldn't make any sense fundamentally. GBP will get stronger, AUD will get weaker. So that's probably going to continue to go higher. So this will be a nice buying zone. So let me remove all the drawings. GBP AUD is a nice pair to buy basically at this moment. What I would do is I would mark up that zone. We have strong support here. We have our previous role reversal level right over here. We have our target zone here. If this comes down, the 50 EMA will flatten a bit. So this will be a very nice zone to start buying from. Of course, we need to see how the 4-hour time frame is looking at. We still have a lot of room to go. We are only here. If we make a pullback to that zone, we still have a lot of room to go much higher. Okay, so that's great. GBP AUD is one of my favorite trades right now. So this is what I'm expecting, and then moving higher, right? Are we going to go to the pivot, or are we going to go to the M2 level right over here? That's unknown for now. I do know that we have a psychological level 173 right over here, which is also gonna act as some kind of a magnet. That's right at M2. Let's see, right over here. That's a major level. Let me, oh man. Major level, okay. So if I would use a sell limit, a buy limit, it would be right on that zone, right on that major level, maybe a little bit higher just to get in, because the big banks also have orders right here. They get filled first, so make sure you get filled just before they are getting filled. My stop loss is just going to be below that that S1 level, and my target zone is probably going to be the conservative target, yeah, which is nice, which is good. We could go higher, but I'm just playing it safe. 3.66 risk reward, not bad. Anything above 3 is great, at least for me. GBP CAD, a little bit more difficult. GBP CHF, too difficult as well right now. GJ, again, if the dollar is gonna get stronger, this is gonna get stronger as well. So again, this is getting really choppy right now. Our previous analysis was, again, strong impulse to the downside, breaking that zone from the target zone or a little bit lower, retracing into that sell zone. We got entered already before the sell zone, which is possible. And then we got another entry right over here. And eventually we went to our target zone, which was, our target was here, okay? So again, that trade worked out very nicely. That analysis was almost perfect. Our stop loss was going to be here and our target zone was going to be here. Okay, that's 1.3.8, also a great risk reward, of course. So I'm gonna leave it for now. Again, it's hard. We need to see what these FOMC meeting minutes are gonna tell us. GBP NZD. I mean, everything is looking a little bit overstretched to the upside. We are not seeing signs that this is gonna stop. On a 1 hour time frame, maybe. Yeah, on a 1 hour time frame, we are seeing divergence. Buyers are getting out of the market, but that doesn't tell us that we're gonna go lower. Of course, we have market structure as well, which is here. Okay, support, 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 broke lower, retesting that support. If we see consolidation and we break lower out of that consolidation and retest it, that could be a nice short ID. But for now, these fundamentals are not lining up for a GBP NZD short. So I'm gonna wait with that. Let's take a look at German 30. So that sell worked out as well. Let's see, now we are falling back below. How is the daily time frame looking? Bearish divergence, yeah. Again, yeah, I'm more bearish on the German 30 than on the US 30, but again, it will depend on these FOMC minutes. So I'm not gonna discuss this for now. We are getting an engulfing candle. If we get closed out today like this, we might see a retracement to fill the imbalance of that engulfing candle, retrace all the way to the open of that candle or to the 50% of that candle, and then continue lower. But for now, I'm not gonna risk my money on that one. Nasdaq, very similar. We need to wait again. All indices are waiting for that FOMC. I am trading this with the EA right now because the market is not going to do much more today until those FOMC meeting minutes. Again, if you guys are trading with the EA, also think about how the market is moving. If you see an impulse like that, usually the market isn't going to do the same thing again, right? And then it's already safer to activate your EA instead of when you're here and then you put on your EA. I know the EA works best in consolidation, but if you're consolidating for a long time, the chances of a breakout are already much bigger. So if you turn on your EA here and it breaks out, well, with the new EA, you have the range feature. So you could say, okay, if it's going higher than this high, I'm just getting out. I'm taking my loss. Maybe it's going to be 1%, but at least it's not going to be an equity stop of 3 or 4%. So you basically limit your your losses, right? But it's just not wise to start your EA at a place where consolidation is most likely gonna end. Okay, so here it broke out. Then you had a nice impulse. Okay, you could say it's not being retraced here. Maybe you got out here, you got out here, you get out here, right? You're probably gonna have some profits in this move, but not in this move. Okay. So now US 30 is at bullish integrity, which is right over here. This was the roll reversal zone. It broke through. As long as we're not breaking this zone, we are we are still not bearish. If we break below this zone, then we might turn bearish, but you can see the bullish reaction out of that bullish integrity zone right here. Okay. Other than that, USD CAD was a setup that we had as well. We didn't got that retracement, unfortunately. USD JPY, we did got a retracement. We only got entered right here. It fell down, maybe briefly break even, or that was probably gonna be a stop loss. Let's see on a bigger time frame how this is looking. We could still go lower, guys. We could still very much go lower, but this is probably the one that it's mostly, or yeah, most dependent on these FOMC meeting minutes. I don't know if you can talk here about the new EA, but your file is crashing every single time and I can't find out why. So maybe, yeah, we can discuss this, but I think it's better to discuss this on the VIP section. But you can. What months are you trading it? What months are you testing it? Let me know. Because it should do pretty okay. I've tested it from April until August, and we do get some crashes, but it's creating enough profits to limit those crashes. You're never gonna go below your starting, your initial starting deposit or your starting balance. Then silver. Silver is doing the same thing as gold, exactly as we expected. So it created bearish divergence in a sell zone, role reversal level, 50 EMA acting as dynamic resistance. We're probably gonna go and create the next lower low. So that's going well. Gold is going well as well. We had an overbought situation here. We have bearish divergence, same as silver. Roll reversal level, 1800 level. We pierced right through, which is to be expected. A lot of guys were selling at 1800. All the bears were selling at 1800. Had their stops at 1805, maybe 800 and nah, not 1810. But a lot of guys had their stops right over here, very close. They got stopped out, and now the market is falling into the desired direction. So we can expect this to continue to go lower. Again, FOMC meeting minutes are gonna show us much more. And then here we were in that sell on oil. So we had a very nice entry. Basically, my limit was right on the M3 zone. Again, we had a nice impulsive move to the downside. We went way past the target zone, but that's not a problem. We corrected into our sell zone. We had a lot of imbalance here, so that's why I didn't want to enter right at that pivot. There was too much risk here, so that's why I wanted to decrease the risk, or at least the distance of my risk, because otherwise, if I would have put it here, my risk reward was only 1.7, so that's not worth the risk. Right now, the reward was, or the risk to reward was 3.76, which is much nicer reward. We got entered right on that M3. It went a little bit higher, but not too high. The stop was at a safe place above the smart money concept entry. These guys didn't got entered. We went a nice move lower. I think we went all the way, let's see, to a 1 to 2.8, which is not bad, but we are still in that trade. We need to see how the market is reacting on that news of lower inventories. Usually price goes higher on that one, but we are already break even, so that doesn't doesn't concern me. If we go break even, then we go break even. If we go to our target zone, that's gonna be nice. Okay, and again, this is impulsive, corrective, so we basically on technical analysis only, we could still go lower. Fundamental analysis is not in line anymore, but we'll see which one wins. All right, so I'm gonna cut the call here. I'm gonna wrap up. Thanks for joining, guys. If you have any questions, let me know. Don't forget to like and subscribe, especially like the chat, so or like the video, sorry, so more guys can enjoy this and we can grow as a community. Again, join our Discord. We are happy to help all the traders that are new. We have an extremely great EA that's working well, so yeah, see you guys. Thanks for hopping on, and until the next live stream.